Hello, and welcome to myfinanceteacher.org. Let's have a quick update on precious metals, starting with the US dollar. Over the last several days, US dollar has given us something resembling an inverse head and shoulders. What that means is that there is still a chance on the table that dollar will continue to go to that resistance zone, as we said previously, from very early September highs. That's at about 91.8 before dropping down. After all, the ongoing short-term daily cycle in the US dollar is already 25 days old today. It's approaching the midpoint. Usually these cycles in dollar last for around 2 months. And the intermediate cycle is 153 days old. Usually these last for just over half a year. So based on the cycle duration, the resistance zones above, and the possible repeated poke above the Bollinger Bands, possibly over the next 1 or 2 days, tells me that dollar is likely to decline after a short bounce over the next several weeks. What does that mean for gold is that in the very short term, gold might actually be moving a little bit horizontally here, especially as the markets open in the US this morning on Monday. But after 1 or 2 days of continued horizontal move in gold, I think gold should probably create an inverse head and shoulders of its own, because if you look at silver, it has actually created a very nice looking inverse head and shoulders, which already broke above the early January highs. And we'll have a look at silver in just a couple of minutes. Continuing to talk about gold, the ongoing short-term daily cycle is only 14 days old. And as these usually last between 1.5 to 2.5 months in gold, I think there is still another few weeks of general upward momentum in gold before some sort of a cool down. So perhaps by the end of this week, we might see gold retesting that upper range of the Bollinger Bands near around 1920 to give us some sort of a slanted inverse head and shoulders formation. Now moving on to GDX. Although for quite a while GDX has actually been trending downwards, since mid-December I see that GDX is testing and sometimes poking slightly above this resistance zone of the 50-day moving average. Since mid-December we've actually seen the 50-day moving average tested at least 4 times. And as I mentioned in some of my older videos, whenever a resistance zone or a support zone is tested multiple times in a row, it weakens that support resistance zone. And as I expect gold to move higher a little bit, possibly into the end of this week, that will likely help GDX to finally break convincingly above the 50-day moving average and stay above there without a fake out before actually continuing much higher into the new intermediate cycle. As I've mentioned over the last few weeks, the ongoing new intermediate cycle has been unusual in relation to silver. Before we continue, let me remind you guys to subscribe to the channel if you haven't, and click that bell notification. Thanks a lot. Usually silver lags gold early in the intermediate cycle and then catches up, ending up actually outperforming. But in the ongoing cycle, as I've mentioned in one of my recent videos, silver has already been giving us higher highs and higher lows. Additionally, silver has already given us an inverse head and shoulders over here, which has already resulted in the test of the target zone at around $30, which also comes close to that resistance zone of the previous high, just around $30 on silver. And of course you might be aware of that short squeeze on silver meme going on in the Reddit community and on some other social media. Again, what I expect on silver as the US markets open today on Monday, I think there will be some horizontal movement on silver, possibly trying to close this gap we've seen over the weekend, because that $30 resistance is unlikely to be just sliced through on the first attempt. But moving on from the short-term view into the intermediate view, as the intermediate cycle continues to move forward, I do see silver breaking above that resistance zone at $30, possibly by the end of this week. After all, the intermediate cycle has only been going on for a couple of months, and usually these last for around half a year. So we still have around 1 month before reaching the midpoint, and possibly at least 1 month or longer before reaching the top of the intermediate cycle. Talking about the top, if we have a look at a longer term view, some of the next resistance zones created by some of the previous highs would be anywhere between 35.4 based on the October 2012 highs and 37.4 based on the February 2012 highs. Say roughly around $35 silver, maybe over the next 1 or 2 months, is actually quite likely in my opinion. After all, comparing to gold, if you switch to the longer term chart, gold is very near its all-time high. The all-time high was just above $2,070 and gold is only around 10% below its all-time high right now, whereas silver, well, silver is miles below its all-time high. As you see, silver is around 39% or 40% below its all-time high. So I think it's time for silver to do some catch-up, and this ongoing intermediate cycle is a really good chance for that for a couple of reasons. Firstly, because silver, as we mentioned, is leading at the beginning of this intermediate cycle, which is already unusual. And secondly, perhaps that silver squeeze meme will help silver to catch up with gold quite a lot. Again, after all, back in 2010, 2011, there was another silver squeeze meme, Crash JP Morgan buy silver, that created this really nice pump in silver when it reached close to $50 per ounce. So that is my view on precious metals at the moment, and let me leave you with a couple of questions. Firstly, do you think that the resistance at $30 is going to be sliced through today or tomorrow, or will it take until the end of the week? And secondly, do you think that relatively small silver market will help the gold market to recover its $2,000 price tag? Personally, I think over the next few weeks, there is a pretty good chance that whatever happens to silver will actually be reflected in gold in a little bit less volatility though. And that is all for now. I hope you had a nice weekend. Remember to hit that like button, share your opinion in the comments below, and good luck in your trades.